Welcome to the Contrarian Capitalist podcast. I'm delighted to be joined today by David Morgan, founder and writer at the Morgan Report. David, how are you?
I'm doing well. Thank you, Robert.
Plenty to talk about, and it's a pleasure to have you here. So thank you for taking time out of your day. I know we're going to speak about manipulation within the silver market in due course, but we're recording this on Thursday, the 4th of September. We've had a very good start to the month just in terms of the silver price, $41, $42, depending on which markets you're looking at. Is that a time to get excited, or is it $40, in your opinion, possibly just another psychological barrier that we need to break in the market?
Well, it's time to get excited if you bought it at 20 or you bought it at 10 or 8 or 17 or 25. So, a lot of patience for silver stackers and they deserve all the gains they've got. And as far as the real question you asked, yeah, any round number in commodities is psychologically important. So, gold, the $1,000 level. I remember, in fact, this was, I don't know how many years ago, I have to look at a chart, but I was asked, and I was getting a fair amount of actual national TV coverage in those days because at the time it was primarily myself and Ted Butler, not the Ted Butler that works with the Morgan Report, but the Ted Butler of silver fame.
Hmm.
And I was asked to talk on the show, financial show, that the 1,000 level for gold was it. That was the top. It was like the ultimate price. Because you got to remember, it moved from 250. So that's, 400% move. And of course, my take was no, it's really just getting started. And we've got a lot further to go. And I made a comment about it's not in a bubble. The bond market is in a bubble. Well, it was a delayed take. I was doing it from the office. And as soon as I said that gold's not the bubble, it's a longer story, but this is the essence of it. And the bond market is the bubble. Well, they cut me off. That sentence
Wow.
never got into the live feed. And they went and put up a great big technical difficulties. So that honest approach of what the bubble is, of course, now we're at $3,500 gold. The bond bubble's bigger than it's been in the history of mankind. And gold has, gone up, over triple since that time. And so again, going back to the question, 1,000 was important, 2,000 was important. Took a while to get through 2,000, you remember. Got to 3,000 in the, Bob's your uncle. I mean, pretty quickly. And now we've broken through that significantly. We're, halfway to 4,000. We're 35 and change. But 40 for silver is the same thing. I mean, 30 was important. Of course, the technical was like 32.50, but any round number. So it could be in soybean oil, it could be in cotton, it could be in cocoa. All those round numbers are significant because psychologically people get used to a commodity trading at a what we call handle. So a 30 handle means anywhere in the $30 price range.
Hmm.
20 handle means anywhere in the 20 price range. Well, now we're in the 40s. So now once we stay in there, people get used to, well, silver's, $40 an ounce. And it'd be interesting for you to do a survey, where you're at and just ask the people on the street, hey, what the price of silver is? And most of them are probably back in ancient history thinking, it's $5 an ounce, and it's 40, and they'll probably fall over.
Yeah, I think that a lot of people are asleep at the wheel. And again, that's the joy of, doing this show, speaking to people like yourself, is to get that message out there to say, wake up, this is what's coming down the road. And I've been writing for a while that although 40, anything can happen at 40 for me, and I think for most people, it's going to be that $50 mark that's really going to be the psychological factor there because I've written before that I think that when you get to that level, yeah, admittedly, I think it's going to go much higher, but that because of 2011 or 1980, 1981, that I think that's when you might see a lot of people selling off because they might not believe it can go any higher than that. I don't know if you've got any thoughts or opinions on that at all,
I
David.
really do. I don't want to dwell on it too much, but I put out a weekly perspective. It's one man and a microphone. It's me. And I try to keep them about 10 minutes. But I made kind of a big deal on our group, on the gold and silver community. And I said, look, in 1980, silver's $50 price lasted in the out call cry market, which is what the futures market was in those days. 50 lasted in the minutes, according to the data. According to a floor trader or two that I still have contact with, they said maybe an hour. So we never had a 50 handle. We never had it traded for a week at 50, 52, 51, 49. We never had that in 1980. And then in 2011, we never really had 50 in the spot month. Yeah, in the futures we did, but not in the actual continuous contract. Didn't hit 50. So what we need is that 50, as you said, and I agree with you, and we need to work around that handle, meaning there's a day's close at 51, there's a day's close at 52.32, there's a day's close at 50.27, there's a day's close at, and all of a sudden you're building a base, or maybe it'll go from 50 to 60. I don't know. But the point is, 50 is a huge psychological barrier. I mean, it's monumental. I cannot think, and I don't look at all the commodities in the detail I used to. I don't have time. I have to concentrate on the big picture and the metals and resource sector. But regardless, I cannot think of any commodity that has had an all-time spike high a day, we'll call it for one day, and has not achieved that ever again, which is really the truth. I mean, the 2011 high was 48 and change. I forget the exact number, but I know it was not 50. So that is a nominal number. I mean, $50 in 1980 is probably 250 now, but we're not looking at an inflation adjusted chart. We're talking about a nominal number that has super significance for psychological reasons. And once we get there, and I believe we will, or we start trading above it, it's going to be very interesting to see how the market reacts.
Yes, 100%. Looking forward to that moment for sure. I know that yeah, a lot of people talk about the financial aspects and geopolitical aspects. I'm not going to ask you those questions. I think they're covered ad nauseum. But what I think before we talk about paper, silver, and so forth, uh, in the physical market itself, there are quite significant shortages. And again, I know that there are people that are going to be aware of that, but I think that this is a factor that a lot of people aren't taking into consideration. So in the physical market itself, I think if I'm not mistaken, it's a 4-year deficit. Do you think that that's just going to get worse? And do you think that's just going to be a continual deficit for the years ahead?
I do think it'll be a continuous deficit. There's a gentleman I have, shouted out several times, and I love to give credit where credit is due. His name is Matt Watson. He's an independent metals analyst. He doesn't look at mining equities like I do or other resource sectors. It's all metals, and he goes from the super exotic to, I don't think he does the base metals, but regardless, he does a lot in the precious metals and the PGMs and all that. So anyway, he did a chart that he is his work, and I had him on my mastermind, which is our top level clients. And in that chart, he shows the projection for a low and a high case for silver going forward from 2020 to 2050. And he shows that we are in a continuous and ever increasing deficit from about 4 years ago onward. And what's interesting about that chart is right about now is everything that's required for industrial silver jewelry and silverware eats up all the silver available on a recycling and mining basis. So above the curve is everything that's investment demand. And then as you go further in time, those three categories, silverware, industrial, and jewelry, exceeds the mining and recycling by a factor of like 50 million ounces. Then a couple of years later, 100 million ounces. Where I disagree with him on the chart is I think that's accurate as far as the big picture. But in his analysis, he shows that the investment demand is a steady like 200 million ounces a year. I totally disagree with that. We've already seen 2021 where the demand was over 500 million ounces. It's 530 million ounces in 1 year. That could happen in 2026. I mean, if gold goes further, or even if it doesn't, I mean, people will, some will wake up and say, wait a minute, gold silver ratio is out of whack. It's still at 72. I think it's in this bull market, it's been 33. So I think it's going to get back to 50 at least. I'm going to swap gold for silver. I'm buying silver. So I think silver definitely has more upside. I think it has a lot of catching up to do, but I think it will.
I'm glad you mentioned about swapping from silver into gold there, because I'm glad I'm not the only one that's thinking about that with when that ratio goes down. But I also find it fascinating that again, people, we could talk political things, we can talk financial things, but basically just on that supply and demand alone, I think that should give people the answer of where silver should head moving forwards. David, I know that you get on well with Bob Coleman and that you've got a good working relationship and very respectable relationship. But the premise of today's episode was to look at manipulation within the silver market. And I know that yourselves have had a bit of a back and forth, but you wrote a fantastic post on X, and I will link to this in the post as well. And really, for those that might not know, what is the paper silver market and why is it being manipulated? And is that manipulation ever going to end?
All right, tough question. I mean, this is, one of the hot buttons for particularly the metals, but it really is pervasive through all the commodities. I mean, it's true in the ags, it's true in oil. You could even say it's true, excuse me, it's true in the financials. So, Steve St. Angelo, who's I consider a good friend and a very sharp guy and kind of a no nonsense guy, he's more fact based than, let's say, some of the commentators in the space. Bob Coleman and I go back decades. Bob came to me in I think it was a money show. It was a investment conference in Las Vegas, and inquired about what he did and wanted to do, and could we collaborate? And I was like him with him, like I am with most people at the first time. I'm like a German Shepherd. I've had two; they're my favorite breed, and I'm a bit aloof because I get hit on, often, especially early on. And so, but as I got to know him, Bob and I have very strong relationships. Going back to the story, Steve St. Angelo put up a post on X saying that, Bob will take on all comers, that silver isn't manipulated or something to that effect. I don't want to misquote it. If you want the exact quotes, go to X and read it all if you're that curious. Well, David said this. Well, no, Bob wrote this. I'm giving you my best memory of it. And I looked at that and I know Bob and I also know Steve. And I thought, you know what? I'll take on that debate, but I'll take it on the basis of, what I believe. And I thought the best way to do it, rather than go on a, 27-page back and forth, he said, she said, I would put out my premise in a very concise, precise analysis that basically could be used in a court of law, basically, if you were going to prove manipulation. That's why I use the exhibits. A side note, I was asked to be a expert witness one of the many times that the spoofing incident has gone to court. Never went, never did it. The situation unwound on its own, and there's that. So I said to Steve, I think I put it on my website, but I wrote Steve, look, if I can start with my premise that you cannot manipulate the long-term trend, and I believe that's true in oil, I believe it's true in natural gas, silver, corn, or whatever. However, within that trend, you can manage the hell out of it. And, some people think it's managed every day. You can make that argument, but I really don't. But within the long-term picture, there have been many episodes where it's been proven that there's been what we call spoofing. Now, if you want to play the semantics game, you can, but and you can stop me where you want, and you can read it on X, and you're going to link to it. So thanks for doing that. But Exhibit A, criminal findings, multi-year manipulation in precious metals future. The U.S. Justice Department secured felony convictions against former J.P. Morgan's precious metals traders, including the desk head, for multi-year market manipulation scheme involving gold, silver, platinum, and palladium futures. Since it was handed down in 2023. So that's Exhibit 1. And I reference who wrote that.
Mhm.
Exhibit B, record penalties for mental spoofing slash manipulation. JP Morgan entered a 2020 deferred prosecution agreement together with coordinated CFTC SEC actions, paid to $920 million, the most significant spoofing related penalty ever, with regulators stating the bank's illegal trading significantly harmed other market participants. Okay, Exhibit 3, civil settlement smoking gun charts. Deutsche Bank settled with U.S. silver and gold price fixing suits in 2016. Exhibit D, benchmark abuse in London at the London Fix in 2014. The UK FCA fined Barclays £26 million after a trader manipulated the gold fix. Exhibit E, uh, broad enforcement beyond one desk or bank. In 2018, the CFTC and the Department of Justice brought a coordinated sweep against Deutsche Bank, HSBC, and UBS, plus individual traders for spoofing and precious metals futures. Exhibit F, structure chartered after red flags. Structure changed after red flags. Academic work around 2014-2015 transition found the old fixed structure showed patterns consistent with information exploitation. Volatility and price behavior changed after the auction reform. The LBMA disputes some of the interpretations, but the process was still overhauled. Spoofing versus manipulation. And here's where I do not get angry, but I get contemplative, because even Bob wrote back something along these lines, and it's okay. I mean, I really don't want to go into the debate. I think I've made my case. You can read it and you can agree or disagree. You can read everything I just wrote and read. And I didn't read it in detail. I just went over the high points, but I don't really feel it's necessary to debate it. But here's the one that my last one, and it's not an exhibit. Spoofing versus manipulation. I say, and this is opinion, so take it at that. It could be argued in a court of law. It'd be up to the jury. So bear that in mind. There'll be some say, no, that makes sense. No, that's wrong. So anyway, here we go. Stop the word games. What the law says, the Dodd-Frank amended in the Community Exchange Act to ban spoofing, which is bidding or offering within the index to cancel. And the CFTC defines it as manipulative or disruptive practice. In plain English, placing fake sizes to fool the market. This is manipulation by statute. Citation from the CFTC. What prosecutors say, Department of Justice charging papers and press releases repeatedly describe the conduct as a matter of market manipulation scheme, and juries agreed. Appellate courts now say the same. Calling it just spoofing doesn't sanitize it. And I give a hot link to that. So is spoofing manipulation? I say yes. You can debate whether it is or it isn't. I think I've shown enough proof that management of the price has taken place. People have been fined, people have been charged, people have gone to jail. I also believe that, again, you cannot manipulate the long-term trend. Would the price be different if we didn't have what I outlined? Probably, but I don't think it would be as much different as many people believe. But we don't know. That's a hypothetical. You can make up your own mind. But part of the market is the market. In other words, there could be a long out there with deep pockets, and someone spoofs the market and they catch it and they realize it and they get, this huge sell-off. They wouldn't have that big a sell-off if they weren't spoofing the market. So keep that in mind. And then that long says, holy moly, this is really under where my moving average is for a week trade or whatever it is. And I'm buying. So the market's the market. I'm not saying it justifies it. What I am saying is I wouldn't necessarily buy into the argument that we would have a much, much different price if none of this took place. You could make that argument. I'm saying I'm not smart enough to know because of what I just outlined. You've got to think thoroughly through both sides of the coin and even look at the edge of the coin at times. You got to look at everything. So last statement, my premise, long-term trend versus episodic control. No cartel can repeal multi-year fundamentals, monetary displacement, industrial demand, mine supply. However, the record above shows the episodic price control, especially around futures order books and legacy benchmarks, has occurred and has been penalized. This is consistent with the thesis the secular trend marches on, the tape gets managed in the short run. The Silver Manifesto, where we went through this in pretty good detail, which Chris Marchese and myself wrote, analysis on the Sharpe ratio, which you can look up what that is, SHARPE, and serial dependence fits as a quantitative red flag lens. In other words, it doesn't absolutely prove to 100% that the market is manipulated at times, but it certainly is a strong, strong indicator. In other words, you can have enough circumstantial evidence in a law case that the jury decides that they cannot overrule beyond, it's so much evidence that goes beyond the shadow of a doubt, way beyond it. So you could use it in that context. Bottom line, we don't need conspiracy theories. We have convictions, fines, settlements, and structural reforms. All those are facts. Spoofing is not a harmless nickname. It's a legal term for manipulative practice that regulators, courts, and the markets itself has acknowledged in the silver and gold market. So thank you for letting me do that verbally. Again, I don't care what the facts are. And it's true, not just in gold and silver. I mean, I'll just say this philosophically. I mean, I came to this not that long ago, maybe 10 or 15 years ago. I've got a few years on me, but I'd say one of the biggest frailties of the human species. So that means you, me, no matter what color you are, religion you are, or where you're located on the planet. I think one of the biggest fallacies of the human species is the belief system can be stronger than the truth. You can believe something that just isn't true, but it will overrule all the facts. And that's called delusion. And there's a lot of delusional thinking in the world. I'm not talking about the commodities or the stock market, but in politics, there's a
Hmm.
lot of delusional behavior. My, blue, 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 red, red, red. I mean, if you ever listen to me more than 3 times, you know my take on the political class. I despise almost every single one of them, and I think they're all a bunch of liars. But that's just me. So I've talked the whole time. Again, I thank you for that because I think hearing my voice helps resonate the conviction that I have. Um, if I believed the market was totally controlled, why would I even buy the silver market? Why would I have started the silver investor and changed to the Morgan report? Because we do all the minerals. We've done lithium, rare earth elements, cobalt, lithium, I just said, copper, zinc, lead, you name it. We've covered it. Anyway, I will give it back to you. Thank you.
Oh, David, no problem at all. I've always been told as a podcast host I should sit back and listen more, so I try my best to do that. I think you've made a lot of points. And again, I'll link to that full post on X so people can go and read it for themselves as well. And yeah, I think that we could sit here and we could complain about it and take a negative stance on it, but flipping over to the positive side, I'll try and look at that on a positive manner and go, well, if they're going to continue to spoof, manipulate, etc., that just creates more opportunity for me as far as I'm concerned. And if they want to keep it at $40 or push it back below, be my guest because that just means more buying opportunity for me, and I'm sure a lot of other people listening to this. So yes, whilst we can sit around and say it's unfair and it's mean and all that sort of stuff, actually, if you're looking to buy and hold on a physical level, to me, it's just fantastic opportunity, and I'm sure that might be something that you agree with, and I'm sure most people listening to this would agree with as well.
I do, and it's interesting to look at my own, thought processes as the silver market has progressed. I mean, I had a pretty good, buy-in around the $5 level, and then, it moved up. And I remember I had done fairly well, and I was looking to purchase again, and I bought around 14, and I kind of made a mental note, I'm not going to pay more than 14 for silver, right? And then it got to, I forget exactly, 22 or something. And I said I wouldn't buy it above 14, but I see nothing else on the board I like better than ABC Mining Company and silver itself. So I bought more at that price. And I actually bought some in the 30s, which looked bad because when it got to the 30 level in 2011, it hit 48 and change, but it came right back down from that spike. But it traded in the 30 range for quite some time. And so I bought some there. And of course, and I called that sell off. I forget the exact number. I don't want to misstate it. You'd have to look at an interview of like a decade ago, but I knew the line. I said it. I can't remember what it was. 28.50. It wasn't that, but something like that. I said, if we trade below this, we're going down and we're going down hard. If you have a big position, you should either sell it or hedge it. And sure enough, about 1 week after I put that out to my premium members, we got that and it did sell off hard. And then I thought, man, what a dummy I am. I bought $30 silver. Now, taking all that in to say this, I teach dollar cost averaging, which is pretty much what I've done. Although I have one account I buy monthly. It's a rather small account, nothing. But as I've gone through this whole process, my average price is probably 22. So I've more or less doubled my fiat return, but still just a continual increase in my stack. So anyway, I just want to get that out there. People, oh my God, David bought, 1,500 futures contracts at 5 and he's still sitting on them. That's not true.
For those that and again, we go back to that psychological level of $40. I know we spoke about 50 earlier on, and I appreciate it's going to be all sorts of people listening to this. It's going to be people like yourself that have been stacking for many years. There's going to be people that might not have started stacking yet, and then they're thinking, do I, don't I? Um, in terms of what you see moving ahead, and again, working on the assumption that someone's looking to start stacking physical, 40, $41, is that a reasonable price, or do you think it could reverse a little bit? Or is it a case of if you're going to do it, dollar cost average might be the best thing to do moving forward? What do you think?
Well, I'd answer it a little differently than you may imagine, but the last thing you said is probably best, dollar cost average. I would look at it from really what I've tried to convey from day one. And that is not so much what's the price, but what's the reason for it. It's more
Mhm.
about a fundamental fact. And the fundamental fact is that all fiat fails. So it's going to fail when silver is at 5 or 40 or 400. The system is doomed, and that's why a new system is going to replace it. And I don't think the dollar is going to go to absolute zero, but I think there will be enough fear in the market within the next year or two where the perception is the dollar could fail or the new system is going to be enacted, whatever. So I would take the approach that if you don't have a hedge in precious metals, then you need one. And what is that amount? Well, there's an amount that isn't perfect, but the guidelines is from such notables as Jim Rickards or many, let's say, of the more establishment, or I don't even call them establishment. Jim's definitely a maverick, but anyone that's in this space that, let's say, has a more conservative approach rather than a wild speculative price for these metals is to put 10%.
Mhm.
So you need a 10% hedge whether you bought silver at 5 or 50. You really want that percentage as a hedge because the reason you have it is if there is an all out collapse, which I doubt, or a redistribution, which I believe is taking place now, where the asset allocation model goes from stocks and bonds and real estate into outer real estate, especially commercial real estate, which is going to be a real bugaboo next year, and out of the stock market, which I think is due for a correction probably in October of this year. We'll see.
Mhm.
And the bond market's already showing signs of being overaged. And it's the biggest market, the one that's the most important. So as that rotation out of stocks, bonds, and real estate, where do you go? Well, there's not a lot of places to go. You go into private equity, but you have to be a certain class of investor to do that. Most people don't understand it. Most people don't belong there. But it's the commodity sector. And what's the top tier of the commodity sector? The monetary metals. So just a slight rotation, let's say 2% coming out of stocks, bonds, and real estate and moving into the metals. Can you imagine what that would do to the price of silver? So, and I think that's already starting to take place. Now, whether or not it's going to catch fire and the trend is going to gain momentum or not, we'll have to see. I do think it will. So I think the way to approach it is, am I hedged or am I not hedged? And forget about the price.
Mhm.
Do I have 10% hedge position? Because it may be a case of it's not so much of how far silver and gold go up, it's how far down housing, real estate, bonds, and stocks go down. So if you were 50-50 and gold stayed at 3,500, but your stock portfolio got cut by 50%, you would have saved a lot of grief because you held gold and it was a constant. And this is not the way most people think. Now, I wrote about this in my private work, the premium service, a few months back. Now, let's not get too greedy. Let's use our brains and let's look at this from an objective perspective. It may be an era where it's he who loses least gains most. Now,
Mm.
I'm not saying there's going to be a liquidity crisis or such a debt squeeze that it's going to do the opposite of what most people think and get into this paper printing fiasco and they're going to get toward, I say toward a hyperinflationary blow off. I don't believe that'll ever happen for the US dollar. But we could continue to inflate the money supply. And and that's what I think most people expect. I expect that actually at some point, but we could get into this deflationary situation. I mean, think about the stock market getting cut in half as a thought experiment. I'm not saying it will, but let's say that it did as a thought
Mhm.
experiment. What would that do to the wealth effect? How many people in America and other countries will say, "Oh my goodness, I don't feel wealthy anymore. You know, my 401k was at 250,000, now it's 125." But if they had gold and silver, but primarily gold because it's more stable as a hedge. Even that 10% would make them feel better. So I don't think it's price dependent. I do think dollar cost averaging is the best because it relieves a lot of stress rather than trying to pick a bottom or a top. Say, look, I need a 10% weighting in the precious metals. I believe, David, I'm 50 years or older. I think I should be 70% gold, 30% silver, and I'm going to do it over the next 6 months. I think that would be a very rational, logical approach. You got $1 million portfolio, you're putting 100,000 in the metals over the next 6 months. Things go south.
Mhm.
You've got a nice buffer there. Things don't go south. You're only taking 10% away from your overall holdings.
Thanks for going in depth on that, and I think that's incredibly valuable for again for those that are listening that might be on the edge about what to do moving forward. I would just add on that if you're going to go down that route, I've kept a spreadsheet, so it's easy for me to go back and have a look and what have I bought in at overall, and I've found that a very useful thing to do as well. David, I know that you are working on a documentary as well, Silver Sunrise. And I know that from previous podcast appearances, you said there's been a couple of challenges over the last 12 months. But if you can, a bit more about what that documentary is about and where are you in that process? How is it coming along?
I think I'll have the final version this Saturday. We're recording on Thursday, as you mentioned at the top of our conversation. And I think that's it. I'll do a voiceover probably for the trailer. I'm not sure it'll be in the actual documentary, but kind of a summary of what Silver Sunrise means to me and what I'm hoping to convey. It basically talks about how money controls the population and how much stress it provides to most people. Most people don't have enough, or they're earning a bigger number than they have or have, on a weekly paycheck, but it's not buying as much as it used to when 10 years ago. And these are the facts facing America and most of the population worldwide. So we have this incessant inflation, which means really depreciation of your buying power. Buying power matters. And so that stresses people out. I mean, divorces happen because of financial stress. Family feuds happen because of financial stress. People fight over money when there's an inheritance at stake, whatever. I mean, money causes a lot of stress. And I just want to look at it from that more spiritual or emotional perspective on why is that and does it have to be that way? And what's really important? Money is important. We're the only species on the planet that's got to earn some pounds or dollars or euros in order to eat. I mean, the animal kingdom doesn't do that. I'm trying to be a bit funny, but it's also true. Why
Mm.
don't we thrive? In fact, one of I'll call him stars in the documentary is Foster Gamble, who produced Thrive One and Thrive Two, and he does, in my view, a superb job of talking about the basic fundamentals of why we are where we're at and what we can do about it. So that's the basic thrust of the movie. It's my contribution to try and help people and also give power back to the people because we are more powerful than we're taught. We're taught to be submissive. We're taught that the authority knows better than us. And I think in this day and age, more than ever, you don't know how to cook, so get a chef or go out to eat. You don't know how to, drive, get an Uber. You don't. I mean, it's like very dependent society rather than being the opposite. The way I was raised, in the '50s, which I was a child, but rugged individuality, rugged independence. Well, I can't do everything well, but I'm a jack of all trades. I can fix a plug sink or toilet. I'm not a
Mhm.
plumber, but I can do that. I can hang a curtain rod. I can put on a screen door. I can, you know, whatever. And that's kind of left us. And I think it's time to get back to that type of thinking that I don't need to be so dependent. We need each other, but we don't have to depend wholly on everyone else. We have to let our own self be true. We've got to look at who we really are, what we really can do. And my premise is, why are you under so much stress and what can you do about it? It doesn't necessarily mean getting a second job. There are other factors. So probably talked too long on it. It should be out very soon. I'll probably give it to the people that supported me the most, and that means the membership I've had over the last 25 years. Freed all of those people, and probably I'm thinking about doing a prequel or a sequel where I may be able to get a few of the interviewees to maybe be with me for perhaps up to an hour afterwards and let my members, ask questions on the spot. Well, what about this? Or why did you say that? Or I never thought of it that way. Whatever comes to the fore, because I think the highest way to live is to have a purpose in life. And many people have jobs, but they don't really have a purpose. And I'm not putting anyone down. I don't mean to sound that way if I do. My intent is that if you can find your passion and make a living at it at the same time, I think that's the highest form of, you know, of your life, really.
Yes, self-gratification, 100%. I totally agree with that. Well, David, it's been an absolute pleasure. Again, I'll put a link to that in the post that comes with this as well. Just before we wrap up and I give you the opportunity to say how people can find you, etc., etc. Is there anything we haven't spoken about today that you would like to mention before we wrap up?
No, I'm happy with everything we said. The best way to find me is on the landing pages is themorganreport.com. And once you're there, there's links at the top right to go to the Twitter account, the YouTube account, the LinkedIn account. If you're interested in those specifics, it's one click away. But themorganreport.com, get on our free email list. All the interviews I do that are public are pushed out to you every week. If I ever get banned off of any of those platforms, you'll still be on the mailing list, which is off of my own server. I own it. And so you will always get the information.
Perfect. Well, I'll put links to that in the post and the show notes that come with this as well. David, it's been an absolute pleasure. I look forward to catching up again in due course.
Thank you, Robert.